Welcome back. Now, it has been a busy year for the telecom sector with multiple deals, losses and expansion plans across all major players in the sector. Today, we look into the South African landscape for telecoms, and joining me with his analysis is Roy Mutooni from Sanlam Investments. It hasn't just been a busy year. I feel like it's been a busy couple of years for the telecom sector. I mean, you've had these telecommunications company with the shift that they are more than just mobile companies, Roy, where they, saying that they're expanding into growth areas, and they're financial services companies, they're technology companies, and now you're also having Telkom coming in and positioning itself as an infrastructure company. So just talk to me about the dynamics of these shifts.
Yeah, thanks for having me, Zanati. It's very interesting to see how the narrative has shifted. But I think if we look at it from a very basic perspective, telcos are highly capital-intensive businesses that require continuous capital investment. And if we look at these three, they've generally averaged somewhere between 15 and Telkom at one point was 20% of sales in capex. Each time you have a leap or a jump in technology, you have to go rip stuff out, reinvest, and move it on. And the more technology comes in, the more it costs. To their benefit, usership has also grown, and that comes out in free cash flow. But the level of reinvestment has been significant, and the requirement for them to keep putting money grows. That's why Cell C decided would rather just piggyback on somebody else's network and not do the capex. So that's the way to think of all of these guys. And what they're trying to do is to basically say, there are other things we can do that are not as capital intensive, that are higher margin, that can provide returns to our shareholders. If you think about it, the whole fintech thing is about the banks trading into their turf, and they figuring that actually we own the infrastructure, we think we own our subscribers, and we want to get a jump on that. So creating wallets, going into e-commerce, trying to get that customer on their platform before the banks own them. So I think that's the trend line over time. One was capital investment, the second one is trying to expand the services, and the third one is consolidation. And you saw that with Cell C, and I think you're beginning to see it across the rest of the industry.
It's quite interesting that you say, Roy, with the expansion into other growth areas, because it's so capital intensive that they're trying to move to areas that are not as capital intensive. But it seems that now Telkom is going in the other direction, where they're like, you know what, we want to be an infrastructure company. Just talk to me about that, and whether also they have the balance sheet for that.
So it's a very strange statement that they've made. So if you're talking about infrastructure and Telkom, what infrastructure do they have? They have their mobile network.
Yeah.
They've got the fiber network. They've got the data centers in BCX, and they've got the towers.
Yeah.
But they're intending to sell off the towers and focus on these other bits. I think it's just a narrative. The truth is, what they're trying to say is, we're heavily indebted. Towers can probably be maximized by somebody else. Let's sell them, bring the cash in, and see if we can continue investing in our core businesses, whether it's mobile or fiber, to try and keep up with everybody else. Yeah. So I think calling themselves an infrastructure company is a bit of a misnomer, because globally, when you talk about infrastructure, you tend to talk about highly geared, that generates a lot of cash, and that gives a solid dividend yield. They're not paying a dividend for the next couple of years. Yes, they're highly geared, but they don't generate much cash either. So maybe it's a story that's in evolution at this point in time. But yeah, I just fall back to the feeling that it's a bit of a narrative that they're trying to build right now. Yeah. It's not where the rest of the world is. It's not what the rest of the world would think about when you talk about an infrastructure company.
Yeah, because a lot of people have been questioning, saying that the selling of the Mast and Towers business is actually in contradiction with this narrative that we are now an infrastructure company. And of course, we're going to see if if that balance sheet really is enough, because they have said they don't need external growth, that they can fund their own growth. Let's zoom into Vodacom because it has been boosting its expansion drive geographically and also in offerings. And of course, one of the big moves is in the fiber network sector, where they want a stake in Massive, the Vumatel and Dark Fiber Africa owner. Of course, that deal still needs to be approved. But I'm just wondering, does Vodacom need this deal, or is it a nice to have?
I think the trend line in mobile communications is to be technology agnostic. So what these mobile companies want to be able to do is to offer you fixed wireless, to offer you wireless, and all of that. So they don't want you saying, I'll get my fiber from this guy and my mobile from that guy and everything. And also remember, like, fiber is incredibly useful when it's attached to a tower. It increases efficiency, increases speed and everything. So I think from Vodacom's perspective, they figure there is no need for us to build a whole fiber network from scratch, but we want to be in fiber, and that's why we want to have this joint venture. They have the advantage that they generate lots of cash, and they can assist Massive invest. And then for them, what they would do is turn to their customers and say, we can give you anything you want. And their customers could even be the other telcos, because you can have fiber to the towers as well. You can offer fixed wireless to the home. You can offer Wi-Fi services and everything. So it's all about trying to keep all of this technology in one place and offering a bundle of services that are effectively technology agnostic.
Yeah, all right. Well, lastly, as we wrap up the conversation, let's take a look at MTN. With the trouble that MTN continues to have in Nigeria, being a very significant market for the company, but also really the domestic market not doing much in terms of growth for the company. Is the stock going to continue being volatile and cheap?
So the thing about MTN is you have to clean out the noise. So the Nigerian business is doing well. They're growing their customer base. They're selling more data, and the data side is growing aggressively. That's what you want as a business. The thing is, it's just that they had said, we want to grow in the fintech side. They're not getting much traction there. And then there's the issue around the deal they did with their towers, which is complicating cash flows, and then the ability to take money out. So they've been able to take some money out, a lot better than most South African companies there. But that noise just drowns the investment case. In South Africa, they were behind Vodacom in terms of network resilience before load shedding, but they're catching up broadly. And then when you look at their other businesses, they're number one, number two, number three in most, actually number one and number two in most of their regions, Uganda, in Ghana, and all of that. So I think it's a business that is actually doing well in local currencies, that is clouded by all of this noise around currency and stuff moving around. I think it's a management team that's actually delivering. But look, during difficult times, nobody wants a story that's got too many moving parts. And that's a reputation that MTN has.
All right. Well, thank you so much for just giving us an analysis on the landscape of the telecom sector, what's happened this year, and things that we can basically look out for next year in terms of their growth story. Thank you so much for your time, Roy. That was Sanlam Investments' Roy Mutooni.